Rohr here with an early global view on Wednesday, December 17th, 2014. It is currently close to 7:30 a.m. U.S. Central Time, and this is quite a bit later than usual because there is just so much to digest in the mornings regarding the macro impacts these days. And of course, what does all this mean to the markets? And as of yesterday, looking at the March S&P future now, we've rolled over to March with the expiration of December on the close of business tomorrow on Thursday, even though it's a modest settlement trade Friday morning. And of course, it acted pretty abysmally late in the day on Tuesday. And part of that was, of course, continued concerns about weakness of oil and Russia being able to spill over into some kind of contagion that affected global financial markets. And as a matter of fact, though, this market's trading all the way back up at about 1977 or so. And why is that important this morning, that it would be up, $12 or so? The answer is that the $7 discount back into the March contract means the December premium puts it right back up toward that key 1985 area we've been looking at overall. Now you can see as we get out later in the day tomorrow, getting out into the 18th, midday onward, the downward channel on the short-term chart is actually down around 1980, and you've got the Fibonacci retracement, barring any further new low today, you've got that right up around 1990. So whether this can get well out back above the 1985 area in its own right to stabilize against some intermediate term levels, it's very important. And of course, we're also looking at the degree to which the lower supports, if it stays below there for lead contract, and we might as well look at the March contract in that regard, are back down around the 1968 to 50 area. 58 to 60 area, and so they're pretty close already. Bigger lower supports be back down around 1940 to 35. That means that's interim supports this side of the really bigger support, which isn't until around 1900, and that's why it's so important this market get back out above 1985, even if there is further resistance on its downside acceleration and overall gaps and congestion on the intermediate term charts up around 2000. And that pretty much does it for the short-term view of the S&P 500.